As human beings, we really don't like uncertainty. We don't operate very well in uncertain environments, and yet that's exactly what the market is all the time. You go to the market every day and you have to deal with uncertainty.
You have to have a passion for the market. So you have to be able to think, and you have to have a passion for it. Those would be the two personality traits that I would say are most important.
My fundamental knowledge is the first thing I go to. And I find that US indices react more to what the market mood is by the underlying fundamentals than a Forex pair would.
My play for the NASDAQ is one last run up to give this higher go.
The ability to go into a trading room like How to Trade and get perspectives from all over the globe.
We have everybody from everywhere that trades all kinds of different things, all at different stages of their journeys.
You truly get really a broad view of the markets and viewpoints that aren't necessarily the same. And always remember, there's somebody on the other side of your trade.
In my opinion, our far right, our outliers here are being wildly undervalued.
It's okay to be a beginner with us in our community, and it's okay to have some experience.
If you've got a community there and people around you, whether you're not necessarily just talking about the markets, but you're talking about something else to take your mind off it, that community feel gives that.
We have a fantastic academy. You don't get educational content that runs alongside prop firms and live streaming and experienced members as well with trade ideas. You don't get that unique combination all in one place that often, and you do get it with House Trade.
And that's really powerful, I think, in terms of having that course in front of you that you can learn from and perfect, and you can tweak fit to how you feel suits, and then become funded from that.
And be a true entrepreneur, really, and try to level up in life.
It's just a question of applying it, and then the trade ideas that come as a result of that, and then all of a sudden, bang, you've got a great trading edge.
Get good at one market. Get good at one type of analysis. Get good at what you're comfortable with.
It doesn't matter what you're doing. If you're persistent and you're willing to learn from your mistakes, you'll get there in the end.
But you always come back to the table, and that's how you know you're a trader, when you're always there.
Hello everyone, good morning, good afternoon or good evening, wherever you're watching from. Today it is my absolute pleasure to bring you this US non-farm payrolls event live to you across YouTube and of course in our loyal trading room. Good to see everyone. Hello to you. Fantastic video. I loved that video before. I was just watching that. Really good. Hello to you, Arsha. Good to see you. Lorianne, John Max. Hello to everyone as well across YouTube. It is, of course, that time of the month where we bring to you this non-farm payroll event live. We have got 13 minutes until the decision till the data is released, shall we say. And it's been a fantastic couple of days so far. You know, what a couple of days it's been. We had the RBA surprise earlier on in the week. They were expected by the markets, from some people, to hike 25 basis points, but they decided to keep rates where they were. We then had the Bank of England, which took a probably more hawkish shift yesterday. More members voting for interest rate hikes, so that was interesting in terms of the performance of the pound. And then we come to just a small matter of the non-farm payrolls, which is always on the first Friday of every single month. So I know for some people across YouTube, hello to you as well, it's going to be maybe your first time covering NFP. You may not know what NFP even is, so we're going to quickly run down what it's all about, explore some of the payrolls that are the data that we have on our screens coming up, and really the impact. You'll see the impact that it has on financial markets. It's normally pretty seismic, so we're looking forward to that. Good to see you all in the trading room anyway. I can see some messages coming through. Stephanie, hello to you. Suri, David, Louis, hello to you as well. Dave forgot to put his suit on. Disgraceful. MJ, that jacket picks up chicks, very nice. And also, when's your next fight? Because I seem to be getting compared to Conor McGregor in the trading room at the moment, and I'm not really sure why, but I will take it. It's not too bad of a comparison. Anyway, down to business, as we say, and of course, what we want to do first of all is really talk you through, just as the sort of aim of this stream is to talk you through NFP first, but don't worry. I know there's lots of messages coming through on YouTube. I can see wanting me to have a look at gold and the NASDAQ and euro dollar. I will get through all of those today. Don't worry. I will provide my just my opinion on that. We do have a poll live in the room as well. We've had a few guesses coming through. If you want me to let you know what my prediction is for NFP, I've said 236,000 is my prediction. And if that's right, I will be marking this message to you. So anyway, what is US non-farm payrolls all about then? Let's just have a quick look at that and break that down really, really simply for you. As we've just said before, it's on the first Friday of every month, typically speaking, And what happens is, a bit of a mouthful, but the US Department of Labor's Bureau of Labor Statistics releases an employment statistics report from the previous month. For example, for this release, this is August release, we're going to see the jobs reports for July, so the previous month. This is obviously interesting in any climate because obviously within this jobs report, the public, i.e. us, traders, we get access to really pivotal information really on wages, job growth, unemployment, and the three official releases that we get are called the non-farm employment change, the average hourly earnings, and the unemployment rate. Released at 1:30 p.m. British Standard Time, that's my time, so in 10 minutes time, and that generally sends shockwaves through the Forex world anyway. In terms of the payrolls itself, let's explore those individually and what they mean. The non-farm employment change is normally the driver for most volatility on non-farm payroll day. What it will do is show the change in the number of people employed during the previous month. And the reason that it causes so much movement is not only because it's vital economic data, but it's the first site of employment we get for the month in the US. Proper site of employment. Next up, we have the unemployment rate, and this will show the percentage of the US workforce who are unemployed but are actively seeking employment. So that's really, really important. So if people are unemployed but they're not bothering to look for jobs, then that doesn't get included in the report. This is the one really to go to if the non-farm employment figure seems to be ambiguous, i.e. it's unclear, or maybe it's just in line and there's no real expectations. We don't know what these numbers are going to be. I've been on these streams with our other coaches, Nick and Shane, and we had a 550,000 popped up when the forecast was like 200. So we just don't know. That's why it's so exciting to trade as well. And then finally, we have the average hourly earnings change, and that's really the leading tool for analysing inflation in this report. You'll hear a lot of language like wage inflation, because the burden of higher prices or higher wages that businesses incur, they get passed on to the consumer generally. So that's really the three reports we have. So maybe take a screen grab of that, copy and paste it, whatever you want to do. Just make a note of those three. They're the three that we're worried about today. You're going to hear me probably in the next couple of minutes or so speak about whether we get a hawkish number or a dovish number, and some people can be confused by that term, but it is really, really simple. This is obviously not set in stone because sometimes we can get reactions which aren't, typically how we would expect, and that's sometimes the unpredictability of news events. However, typically speaking, when we're talking about a hawkish number, we're talking about the reaction being stocks lower, dollar up, and gold lower as well. So stocks down, dollar up, gold down. If we were to get a more dovish number, and I will explain with our game plan in just a second, so give me a second. Stocks up, dollar down, and gold up. That's what that typically entails. Of course, it's not set in stone. Just had a few predictions coming through on the trading room. MJ 150k, Arajit 163, MJ now says 162. Sorry, I've got to take your first answer. 195 from Jenny, DRM 184. Wizard Alvin says 395. I hope you're right. And Dave says 219. Brilliant, fantastic. We've got 7 minutes to go. We have got enough time to look through the price action. Do not worry. But typically speaking, this is how we like to do it. At ForexSignals TV and How to Trade. This is how we like to break down NFP because it can be a complicated beast, should we say. And what we do is this is our game plan. So on this left-hand side, we've got what number or what sort of figure we get would be deemed as hawkish in our eyes. and what would be seen as dovish. So you can see on this top row is what we're focusing on, dovish on this bottom row, and we can see the impact that will have on these markets, the main markets that NFP would affect. It does typically affect all markets, really. The first number we look at is the non-farm payroll employment change. I said before, that's the most volatile. For me personally, I think that a number of around 275,000 or more, the forecast is for around 200,000. I think that would be a hawkish surprise. And I think that would be our stocks down, dollar up, gold down. And I'm saying that if we're going to get a dovish number, I think that number will be the 170k mark or less. That's what to me would be seen as dovish. I think stocks may rally on that, dollar may go down, and gold may go up. If we're sort of in line, we get 200k, that's not really going to change what the markets expect the Fed to do. It may not change it anyway, but just for the initial reaction, if that's unclear, we go to the unemployment rate. Forecasted at 3.6%, I believe. For me, hawkish would be around 3.5% because we're saying less unemployment. That's a stronger labour market. That would be my hawkish number. And my dovish number would be 3.7% or more. If that's unclear, again, say it's in line, move over to the average hourly earnings. 0.5% or more for me would be seen as hawkish, and 0.2% would be seen as dovish. Before I move on to the charts, because we have only got 5 minutes, so I'm mindful of the time, I really want to hammer home the idea of risk management around these news events. So I've come up with 3 scenarios that you're probably sitting wherever you are watching me, and this is the sort of situation you may be in, and this is how I tackle NFP or any big event. If I'm in a winning trade, I always ask myself, can I move my stop loss to entry before the event? That just sort of saves you from, seeing your trade in profit and then seeing it be stopped out instantly. Now, I know there's things like slippage and stuff, but generally speaking, if you're in a decent amount of profit, can you either take some partials? Can you move stop loss to entry? You may be someone who's sitting there struggling because you're in a losing trade, and that's fine. We've all been there, and there's nothing wrong with being in a losing trade. But just ask yourself, are you risk managed already? Because if you are, you may need to. It may move into profit, but if it just be prepared that you may hit stop loss pretty quickly. But if you've only risked, say, 1% of your account, that's not too bad. Or is there a more sensible stop loss to sort of minimize your losses around these unpredictable events? Or, for example, you may be a person who's not in a trade. If you're not in a trade, currently like myself, wait for the markets to settle. Always wait for the markets to settle. Often we get lots of market manipulation around this event because everyone's trying to get in. But once the market settles, clean moves do appear. And I'm talking clean moves appearing on Monday, Tuesday, Wednesday of next week. That really is something I wanted to hammer home. Just had the poll predictions through. The majority of people, 40% of people, believe that we're going to see less than 200k. Interesting. We shall see how that plays. Anyway, let's talk about that. Let's talk about the charts. Let's talk about the price action, and we'll talk about that for sort of 10 minutes after the release as well. I've got a fairly clean outlook on gold, although it has been quite confusing, and I think a lot of people have struggled with gold over the last couple of weeks. We can see that, generally speaking, that the price action's bullish on the daily time frame, but we just switched momentum here, and I'm just following the structure down first of all. We had a little bit of a snap higher, but more importantly, we had this 50-day moving average crossing over and below that 100-day moving average. To me, that's a sign of bearish price action to come, i.e. gold lower. If we do get a hawkish number today, remember that's dollar up, gold down. I see gold making a move down towards some of these lows, and let me just knuckle that down onto the 4-hour chart. Okay, what we may see is a move down to 1925, and I think, and I've mentioned this in my weekly preview for next week, so keep your eye on the YouTube channel. If we get a breakdown below here, I really think that we could be retesting 1900 on gold, albeit with that being said, if we were to get a more dovish number from our game plan, then really what we should expect is gold to have a rally and at least, come and test 1940, maybe even come up a little bit higher and maybe come and test 1950 if we were to get a more dovish number that comes out. I just want to stress when it comes to that though, if the number is too low, and when we talk about the stock market, and we see just a really big sharpening decrease in the labour market, I actually think that although we may see stocks higher off the back of the release potentially, I actually think that this is probably more risk off, because that will bring the probability of interest rate cuts onto the table. And as we've seen in history, it tends to be that as we get interest rate cuts, that's when the market tends to actually tail off a little bit. Okay, we've got a minute to go. I'll have a look at some of the other markets after this. The dollar index and the NASDAQ I've got my eye on as well. Have a few charts open, and best of luck to those who are trading today. It's going to be a big one, I'm sure. Just seeing gold ticking higher off the back of the release, but I expect some sort of explosion coming imminently. So as soon as I get that report, as soon as I get the figures come to me, I will let you know exactly what they are. Good luck to everyone. Oh, gold spiked lower. 187,000 is the figure. So we're seeing a figure which is below forecast. No surprise to see gold react pretty sharply there. Look what's happened here on gold. I mean, come on. We have just wicked straight into my support area at 1925, and we've immediately started trading higher. That's a more dovish number. Who said 187,000? 3.5% unemployment. That's pretty low, actually. That's definitely a more hawkish number. I'm quite surprised at that. So you could argue maybe a little bit of a mixed bag there, to be fair. But we're seeing the initial reaction quite perfectly on gold from that 1925 level. So if anyone was looking at that level, and if you were quick enough, of course, which is probably unlikely, that was a fantastic opportunity. But we are seeing lots of volatility here. Let's just quickly take a look at the indices market. Let's have a look at the NASDAQ, for example. How's that reacted? Higher. No surprise there, because what we see is the figure which is just slightly lower, and it is a softening of the labour market. You have to admit, if I go on to here and have a look at the figures we've had previously, you can see the softening of the labour market coming through. You can see when was the last time we had a figure below 200,000? We'd have to go back to January of 2022 to see a figure below 200,000. So that is a surprise to the downside. And yeah, really interesting to see that softening of the labour market coming through. Average hourly earnings are up 0.4%. So we've got forecasted at 0.3. You can see that come in at 0.4. DRM says he was very close. He only missed the mark, the prediction by 3K. And that's a pretty good effort. I'll give you that. But yeah, we're seeing muted. I wouldn't say muted, because obviously it's been a big spike on either side. But I think now what we need to be careful of is we're seeing traders maybe start to digest that information. Has it changed? It's not really maybe 1% either way. I think this was at 80 before. So there's even more chance of the Federal Reserve actually keeping rates where they are. And I think that in the very short term will be positive for the stock market. I really do, because as I've said before, when I think the markets are looking to or predicting rate cuts, I think that's when we start to see a real slowdown in the economy, and I think that's when we start to see more risk-off trading. As of right now, rates holding where they are, things aren't too bad, the economy's not too bad. Some people would say differently, but in terms of the data we have in front of us right now, and that may see the markets continue to grind higher. Now, my outlook for the NASDAQ, if you want me to give you some price action, looks like this. Now, I've spoken in the trading room in detail about the NASDAQ, and everyone who knows me knows I like trading the NASDAQ. I do. I like how it moves, but I like all US indices. And we've had it before where we've had bearish divergence on the daily time frame, and what's happened is we've had maybe a week or so of downside, and then the buyers step back in, and it's sort of been that sort of mood is what we're seeing in the markets right now. But what I've noticed here is obviously the clear divergence we see. the RSI really banging its head on 73, but the market really exploding 1,000 points to the top side. But the difference with this divergence that we see this time is it doesn't look to me like a simple couple of days pullback and a spike higher. You can see we tried to rally again, and this was a big day on Wednesday where we had that huge 2% fall. And I'm wondering whether we start to see, say by the end of next week or something, this market really starting to hold below this low here. And then we've got that 50-day moving average. And if we get a break below there, that opens up the door to the likes of 14,800 or maybe even at the lowest point 14,500. Again, I'm really mindful of that because as you've seen previously this year, it's threatened to do it but not quite happened. And I think what August is right now is a setup month for more volatility to come in the latter half of the year. MJ's just said that the Nasdaq is going to fall to 10,000. And I mean, if you're someone like me at the start of the year, and I hold my hands up and I thought that we hadn't seen the bottom in the stock market, and I'm still not entirely convinced that we have. 10,000 would be an absolute monster of a trade. But then again, some people will say, no, we're going to all-time highs and we've got 16,000, 17,000s coming by the end of the year. Really, in the macro environment that we see right now, it's difficult. All I'm saying from a price action perspective is we're starting to see signs of a change in structure here. And if we start to see that break lower, then that will be something that I'm looking at in a lot of detail. Marco, I was way too optimistic. 295,000 was what I said. We've all been there. It's no problem. Let's just hope you call the markets a bit better, that's all. Let's have a look at crypto. For the crypto traders out there, you can see that Bitcoin at the moment hovering just below that 30,000 mark. You can see this channel that we were in previously. That was a fantastic breakout trade, but are we seeing something similar here? There's two things we could say. We're seeing a really low participation sell. There's our fake out. Is this going to explode higher again? I wonder, potentially. If not, again, we do see signs of divergence here on the daily time frame. And I just see it across risk assets, and I've looked at the DAX, I've looked at the S&P 500. The Dow is a little bit different. If you're looking to buy a stock market, the Dow looks like it's breaking out quite nicely from the inverse head and shoulders. But again, risk assets look to me like they're just starting to lose some steam. And I know that in August, people are on holiday and the participation rate is lower, and that generally causes some stock market rallies off of low volume. I get that. But I think we're setting up for a really volatile end of the year. Alstafat, hello to you. Hi, do you think non-farm payroll is better than last month's, especially after the figure has been revised? Besides that, unemployment rate is 3.5, which below last month and the forecast figure. I see the date is good for the DXY. What do you think? And also had a question from Arajit. What about the US 30? Okay, let's have a look at both of those. So the employment figures, what basically Alstafat's pointing to here is this revised figure we've had at 185,000. So actually, when you look at the figure that's come out, what he's saying is we're roughly in line. Now, what that says to me is a softening of the labour market. So when we come to look at the US dollar, for example, and yeah, it's 2,000 more than previously. Okay, that's probably why the reaction that we see isn't as clear cut, because a lot of that is quite unclear. So we may see less participation. Therefore, when I think about that, Alstafat, I want to look at the dollar index from a price action perspective. So what happened here is we had that break lower. Now, I can't get that break lower out of my mind, because when we had that break lower, that was a real statement of intent, potentially, that the dollar index was going lower, but you can see that we snapped higher. Now, look where we've run into. Let's get rid of this, because we never got the reaction. We've run into, and we're trading just around this 50 and 100-day moving average, and we've had a reaction from the 78.6. So actually, this area, for me, on the DXY, is a really important resistance area. If we get the break higher, Alstafat, above 78.6, and we see the market close above 102.8, I think that opens the door up to more dollar upside, and I see a move up to 103.5. How you marry that up with other markets is up to you. I was looking at GU earlier on, and I was thinking, look at this, just hovering again below the 50-day reaction from here. We've got sell-side liquidity. We've got a demand zone here as well at 1.26. That could be support, but that would need more dollar weakness to maybe back that up. So we'll see. Sorry, just reading some of the stuff here. So there, that's my opinion on the dollar index. I actually think as it stands right now, Alstafat, the figures are slightly lower. The softening of the labour market's coming through. It's edging lower. The softening of the labour market. And for me, for the DXY, until we get that break above 102.8, the dollar index, I still see some continued selling opportunities. Okay. And of course, some people think the unemployment rates are fake anyway, so that's fair enough. I can't. Anyway, the Dow, Arijit, is slightly different because do I think that we could see some more downside? I do. But I can't really argue with the fact we've got this inverse head and shoulders. It's really clean on the weekly above this trend line that really formed, and it just created some really fantastic buying opportunities. Smacked right down into the 200-day moving average. There was our right shoulder. There's our trade higher. There was our breakout trade that I was talking about, and now we're trading above 35,000. This to me looks more bullish, actually, funnily enough. That doesn't mean that we're not going to get some sort of pullback. And for me, what I'm looking for is if we draw some fibs on there. So I'm doing a bit of everything here. Smart money, fibs, indicators. Chuck it all on there. You know, this area here, for me, Arijit, is my area that I'm looking to potentially buy from. Why is that? Because what have we got in here? We've got the 38.2 and we've also got imbalance. Okay, so I think potentially this area could see some support around this 34,750. Now that's still a fair amount away from where we are now. So maybe what I'm anticipating is some more risk off selling. Maybe concerns about the softening of the labour market. You know, seeing some risk off selling here down to 34,800, and then looking potentially to buy that higher, depending on the economic situation that we have. But just from a price action point of view, that does look quite solid indeed. Okay, fantastic work. I think that's roughly about it. Let's just quickly loop back round to the gold market. We're up 0.3%. And you can see that dovish number coming through now. And you can see that playing through. Okay, interesting. We are breaking higher here. Fantastic reaction from 1925. I'm really happy with that. Obviously, I couldn't catch it because I'm on the stream. But I'll see what the situation is for the rest of today. I'll update the trading room as and when I can. As always, of course, we will be back next month, streaming every single day. Next week we'll be streaming every single day, but next month we'll be live for the NFP again. But we will be streaming every day from now, covering everything in the market. So if you are looking to join our community, then feel free. Visit our website, www.howtotrade.com. And yeah, come and join me, Nick and Shane on the streams. Come and join our fantastic community. We're more than happy to welcome anyone. So yeah, fantastic. Okay then everyone, thanks very much for tuning in today. Do trade this action well. If you're not in a trade, remember, number one rule, wait for the markets to settle. We will get some cleaner moves next week. It's US inflation next week. Our weekly preview will be available very shortly on the YouTube channel. Thanks very much for tuning in and take care. See you soon.